What's up, baby? What's going on, everyone? Welcome back to my channel. Welcome back. In today's video, I'm going to be talking to you about the 5 most important candlesticks to help you improve your trading. And these are the top 5, right? I picked these 5 for not really advanced, but it's good to start off with. Like you need to know these 5 candlesticks for you to become a little bit profitable on your trading, right? Yeah, guys, let's get into the video. All right, guys, welcome back to my channel. In today's video, this is what we're going to be talking about. These 5 different candlesticks, if you really know these 5 candlesticks, it really does help improve your trading. So I'm going to be going over the top 5 for beginners. You know, this is not really advanced. There's a lot of more other patterns, candlestick patterns, but these are the most basic, these are the most common, and I feel like it's a good start to start on these 5. So you see here on top we have the dojis. The dojis is basically a candlestick where it just really tells us that there was indecision in the market within that moment, right? Indecision within that price. All these candlesticks tells me that the price didn't really change much, right? Now a lot of people read it differently. A lot of people see a doji and they instantly think that it's a reversal, right? In my case, I don't think that. I really just look at it as an indecision in the market. There was really nothing. I skip this. Like when I see the doji happening, I just completely skip it and go to the next candlestick. So this is how I look at it. A lot of people see a doji and they instantly think it's a reversal, right? Each to their own, but I honestly think that this was an indecision at that point of time in the market. Had an indecision, and yeah, this is what a doji represents in my personal opinion. So now moving on to the second pattern, which is the bearish engulfing. I love the bearish engulfing because I honestly take my sells after I see a good strong bearish engulfing on a higher time frame. Be careful of the smaller time frames because you could get a lot of fake outs in smaller time frame, but with higher time frame it's really especially if it lands on a psychological level or a key level, I'm taking a sell if I see this. So a bearish engulfing really most of the time happens, let's say the market is trending upwards, we are in an uptrend and the market reaches this level right here, and then we see a bearish engulfing. A bearish engulfing represents a change of direction, and now the bears are now in control, right? You will not see a bearish engulfing in this uptrend at all. Once you see a bearish engulfing, that means the sellers are now in control and the sellers are now ready to push the market down. And that's usually where I take my sells after a bearish engulfing. It's one of my 5 confluences to take a trade, to enter a trade. So we have the bearish engulfing right here, and I will go over examples with the actual charts to show you guys, but this is just, I drew these for you guys to see, to explain it better and stuff like that. So obviously we have the bearish engulfing, sellers are in control, the market is ready to change trend, and all these things. Usually you find them at the end of a trend when the trend is ready to reverse and go into a bearish market. And then obviously on the opposite side we have the bullish engulfing, which is same thing, the complete opposite. We are trending downwards, right? We're in a downtrend, and then you get these on a key level or on a psychological level, and that just honestly tells me that the buyers are now in control to push the market up, and that's why I take some buys. These are one of my top candlestick pattern. These are one of my top 2 candlestick patterns, and it's one of my confluences to enter a trade after I see a bearish engulfing or a bearish engulfing. Depends if I'm buying or selling. And usually you can catch these when the trend is over, so you can catch a new trend from when it starts. Same thing here. Now let's go over these bearish tweezers and bullish tweezers. Bearish tweezers and bullish tweezers are usually, so this is a bearish tweezer, right? Let's say the market is going up, going up, going up, and then you see these two candlestick patterns. Now, what is this telling us? What are these two candlesticks telling us? It's telling us that the market was trending up, right? Market is trending up, and we are in a bear market, right? We're going up, then boom. The buyers push it all the way up to here, right? They push it all the way up to here. But then the sellers comes down, push it all the way back to here, right? And that's where the candlestick closed, right? This is the open of the candle. This is the close of the candle. And this is the wick. The wick tells me that the buyers have tried to push the market up to that point in time, but then the sellers were too strong and they pushed the market down, right? Now that tells me that now the buyers are exhausted. The sellers are coming in the market, and then once you see the second one forming like this, where the buyers tries to take it up again, but fail one more time, and then the buyers come again and try to take this candle up one more time, and they fail. Now, when I see these two, and you usually see them at the end of a trend or at a very high point in the market, and that really indicates that, hey, the sellers are now in control. And now we are ready to sell the market down. Now, I don't just take a trade just only based on if I like. This is just one of the. This should be one of the confluences onto why you should entering this trade. You should have a minimum of 3 to 4. Honestly, a minimum of 3 to 4. Anything over is good. Anything below, a bit risky. But 3 to 4 is a very good. Yeah. So Wix tells us that the market has tried to go up to that point, but then the sellers came in and pushed it all the way down, and these candlesticks closed right there. That tells us, hey, and the second candle must also close bearish to confirm that the sellers are now in control. And last but not least, we move on to the bullish tweezers. Bullish tweezers are the same thing. The bearish is just the complete opposite. We are in a downtrend. The sellers try to push the market down, and then the buyers step in at this point in time and take the market back up again, and the candle closes there. The second candle prints, sellers try one more time to push the market down, but they fail one more time, and then the buyers come in and push the market up, and this candle closes all the way up here. These two together tells me that the sellers are now done, the buyers are in control, and we are ready to buy this market to the upside. Now, these are my top 5 candlestick patterns that I use on my day trading, on a day-to-day. I look for these candlesticks. Now, let me show you like a live example of any of these sorts on the chart. Now we are here at a AUD USD. Now you can see here, look what happens. Doji, cancel it out. The next one is a bearish engulfing. What happens after that? Market drops. Now the reason why I cancel this candle, it's because it's indecision candle. It's an indecision candle. The market did not do nothing, it just stayed there. I cancel it out, put this one and this one together. What do we have? We have a bearish engulfing. This one engulfed this one. You see it closed way below, looked a little bit above, and then it dropped down all the way. What do we have here? We don't have a bearish engulfing. Let's see if we can find. Look at this doji right here. Indecision. The market did absolutely nothing. This is one of the tweezer tops, which is bearish. You see buyers tried to push it up, came back down, close it there, boom, drop. What do we have here? Bearish engulfing. What happens to the market? Completely drops. Let's see if we can find some bullish patterns for you guys. Cancel this. There's a doji. Cancel it out. That's how I look at it. My personal cancel it. Put this one and this one together. What do you get? A bullish engulfing. What happens? market goes shoot up. Guys, it's really that simple. When you get a bunch of dojis, like right here, cancel all of them out, put this one and this one together. You can see it barely closed below, and then you get another doji, bullish engulfing, boom, market shoots up again. Doji, cancel it, put this one and this one next to each other, bearish engulfing, market shoots down. Guys, this is crazy, but I hope you guys enjoyed today's video. I really hope you benefited from my top 5 candlestick patterns. If you found value, please do hit that like button, subscribe to the channel for more content like this, and I will see you in the next video. Peace.